A State of the Union happened yesterday. Talked a lot about defense spending, healthcare, North Korea, all this kind of stuff. What was the key takeaway for the market?
You know what? Look what the market's doing. The market's a little bit confused. I think the narrative coming out of Washington has been not any kind of clarity or coherence as far as policy goes. So at the end of the day, there was a lot of talk. The State of the Union tends to be a lot of promises, a lot of like all my assets. This is what I've done and everything like that. I don't know how much of it has to do with what's coming out of the White House. At the end of the day, I'm a fundamentals guy, right? So, the fact that we didn't go to, if it wasn't for Mr. Trump, we would have actually been in war with North Korea. I don't know. I mean, I think we need to look at the fact that the transparency coming out of the Fed, the 1-year anniversary of Mr. Powell, is wonderful. He's been clear to us. He's given us a box of chocolates. It's all good. The earnings season, mixed at best, I kind of think, but seems solid and fundamentals are good. One of the best Januaries we've seen in 30 years. Clearly, in the last 12 months, the best January we've seen since last January. A 14% rebound off of the Christmas Eve day lows. Spectacular. Fresh money coming into the market. People need a reason to buy or a reason to sell. At the end of the day, I think we've taken the Fed story off the table. I think we've got a little bit of a coherency as far as potential for a China deal, right? I think whatever's happening in Washington is happening without our permission, and it's not that much of an effect on the market. And so I think people are refocusing on the fact that it's time to get back to work, invest in America, invest in the market.
Hey, Peter, question. Where are you seeing the most size? Are you seeing it in individual stocks or sectors?
You know what? For me, I don't look at individual stocks per se, but I'm looking in the market in the S&P, right? What I track is the S&P, and yesterday, 378 stocks here on the floor of the New York Stock Exchange in the S&P were 95% to buy and $3 billion. That's significant. That is a big number. That means money came in. And it wasn't like the other side came into the market to pair it off. The market reacted to that imbalance. The market rallied on that imbalance, and it was a classic buy program that showed that there is faith in this market. People are putting money back to work.
It's classic.
It's classic.
I like that. That's the word of the day. Classic.
Classic, yeah.
Well, thank you so much, Peter, for taking the time out of your busy day. Let's see if we can go find Peyton Manning.
I'm okay.
He was just on the floor.
I know he was.